Hey guys, so I can't seem to figure out why. So what was supposed to happen is we were supposed to have this, and then we're supposed to have some music playing, and then the scroll bar is supposed to run right across, leading to the startup of the daily market analysis. But as we have it, I can't figure it out. If any of you have a good idea of how to get that going, drop me a message, let me know. What I do tend to tell everyone is that, hey, I am good at trading, I'm good at analysis, but when it comes down to the tech side of things, I'm totally lost. So I hope you guys can hear me okay and see me all right. Put it into the chat, let me know. Hello, hello. Sound and video okay? Cool. Thanks for that, Dad. Sorry if I'm messing your name up. We'll give it a minute or two before we get started. I hope you've all been well. And hey, if you can, help me out. Click that little rockety button there. Click the rocket button. Let's see if it helps to get more people on board. Hey, start there. Thank you for all the boost from yesterday. Really appreciate that. Hey, Franklin. Hey, Jamilu, how are you doing? Hey, Amma, Jamil, how are you doing? Good morning to you. We are on YouTube and on TradingView, so if you're joining us on either platforms, please feel free to click that like button, click that little subscribe button and the rocket button for me. Let's see how it helps with the algorithm. All right. Give it one more minute. I'm trying to sort something out, and then we'll get started. Good to hear, Jamil. Very good to hear. Okay, I'm not sure what's happening here. Okay, so I think without further ado, let's get started. Right, so again, thank you all for attending this session here today. I'm glad to be back again. Daily market analysis, we're looking at the fundamentals, we're looking at the technicals. With that combined, we're looking at the possible trade setups and also where we think prices could be heading towards for the rest of the day until we meet again tomorrow. Okay, so as usual, you all know the drill. What I like to do in addition to that is that if you are joining me on TradingView or on YouTube, put it into the chat. Let me know where are you joining me from. I love to find out. I like to see how far reaching we are. We're not a person in one country. I like to consider us as people in a global marketplace, right? That's why we do FX. So in a global marketplace, put it into the chat. Let me know where are you joining me from. Okay. Jamil, no big news. I don't think there's any big news today. No huge news. So we'll see what happens. Okay, and if you are as well, click that like button and we shall get started. Netherlands, good on you. Thanks for joining. What about everyone else? So whenever I look to this side, just to let you guys know, I'm looking at the chat on this side. So, all right. So as usual, before we get started, a quick disclaimer. First of all, any information contained in this webinar should not be construed as advice, and is presented as educational material only. So what I always say is learn before you earn, right? Try it out, understand how we look at the markets, what we consider, what we plan, learn how to identify that trade setups before you start jumping into trades to try and make that money. All right, we always have to learn before we earn. And also your objectives, financial situation, and needs has not been considered, and you should consider its appropriateness to your circumstances. I will be looking at many different currency pairs, many different possible trade setups, identifying levels, stop loss levels, take profit levels. Um, if you do jump into all the trades, please be very careful. I always suggest is make sure you check your leverage, manage your risk, and don't jump into all the trades at the same time, right? Because that's going to mess with your trading psychology to no end. All right. And then the contents of this webinar are not intended to be a recommendation to trade a financial product. Please remember DYODD, do your own due diligence. Make sure that it fits whatever trade you want to get into, despite whatever we're saying. Make sure it fits with your own trading strategy, your own trading methodology. What I mean by that is I'm a very trend following trader, right? So I look at where prices could be heading towards. If it follows the trend, then I'll get into it. I also do know that many people in my team are counter trend traders, which means that they'll be looking for a reversal or brief spike up or surge against trend before they get into a trade. So it will not work if you all jump into the same trade, if you are more of a counter trend trader. So do your own diligence, learn before you earn, leverage your risk, and manage your leverage, manage your risk, and psychology, trading emotions. Okay. Hey, Vanna Black, what's up? It's all good. Stardust in Trading View. Good to see. All right, so let's get straight into it. I need one more thing open here, which is Forex Factory. Okay, so soon you will get to see that I do follow a very standard process where I always will check out Forex Factory first, look at the news, look at what could happen, what has happened, what could happen, and then after that, I'll look into the charts to identify where I think prices could be heading towards, if it's breaking a support level or breaking a resistance level before I look to jump into a trade. Okay, so again, I see you guys. Thank you for putting it into the chats and all that. If you do have any questions at any point in time, please put it into the chat. I'll be happy to address your trading related questions at any point in time as it comes up. So just a quick review of what happened yesterday, right? Since after we spoke. So we saw a whole bunch. We ended the session about 4 o'clock yesterday. We had a whole bunch of PMI numbers coming from the Eurozone and also from the UK. And as expected, no big changes, no big surprises there. German manufacturing PMI staying the same, Eurozone manufacturing PMI staying the same, the UK with their manufacturing PMI staying relatively the same, a slight increase, not non-material, not likely to push prices too crazily. And then also at 11 p.m. GMT plus 8, what we saw was the US ISM manufacturing PMI went from a 47.4 to a 47.7. Not a big change again, no big surprises there. So all as expected. Last night was a very choppy trading session, right? A very choppy trading session because we did see the dollar index fluctuate quite wildly, right? Quite wildly. So let's look at the today's session. So Jamil there on YouTube says, big news. No real big news today. The main one that we will look at, or the main one that you would pay attention to, is at 6 p.m. GMT plus 8, where we do have the Eurozone with their flash CPI or CPI flash estimate year on year, was a 8.6%, expected 8.3. Core CPI flash estimate year on year was 5.3, expected 5.3. So at this level here, I don't think we're going to see a surprise on the Euro CPI data. What I mean by that is I think we're still going to see 8.3 as a flash estimate year on year, and also I think we're going to see 5.3 or maybe slightly lower, but around that 5.3 region. So with no big surprises here on the Euro CPI data, what that's going to mean is that we're going to see more, or I wouldn't say more, I would say that the ECB could maintain their current stance on the monetary policy, right? So it's not going to increase their stance on the monetary policy. It's not going to decrease their stance. They're possibly going to maintain on the current stance. So what I mean by maintain on the current stance is that President Lagarde from the ECB has recently mentioned that I'm trying to guess word for word, but I can't remember word for word now. But she implied that 50 basis point rate hike at the March ECB meeting is pretty much priced in, is pretty much given, is pretty much decided. Only after March with the CPI, no, after March interest rates decision, the subsequent ECB meetings and interest rate decisions will be data dependent, right? Will be data dependent. So we can pretty much expect 50 basis point to come, and then after that, it's going to be data dependent. What data? Data such as the CPI flash estimate and a core CPI flash estimate. All right. So this time round, not expecting a big surprise on the Eurozone CPI data, and because of that, not expecting a change from the ECB's standpoint in terms of interest rates decision. And in fact, while we're talking about that, just let me scroll through and see when is the ECB interest rate decision. We have the Bank of Canada next week. We have the US. Okay, so it's Thursday, the 16th of March. Thursday, the 16th of March, where we're going to have the ECB monetary policy statement, main refinancing rate, and the press conference. Okay, so that's when we're likely to see that 50 basis point rate hike. Before that, I don't see any major ECB or Eurozone news which would change that expectation. Okay, which would change the expectation. So I think it's safe to say that that's going to come out at 8.3, 5.3. No big surprises there. Hey DDK, how are you doing? Good to have you here. Okay, following on from that, what else do we have today? ECB monetary policy meeting accounts. Typically not a big price mover, so no, I'm not too concerned. US unemployment claims, no big change, 192K, 196K. This is a weekly number. You look at that. This is released weekly, so impact on this is going to be relatively low, especially not expecting a big change in terms of data. And then following on from that, no big news coming up. Okay, so you can see that with no big surprises to come from the news front, from the economic data front, we look at the charts. Right, so looking at the charts, this was what we talked about yesterday. Right, this was what we talked about yesterday, where we were expecting dollar weakness to 104.40, and if it breaks, it could test 103.80. Super happy that it did come down to 104, 104.40. If it breaks, it didn't go to 103, it stopped at that 104 level. right? It stopped at 104. So I'll take this line away. It stopped at 104 and then rebound back up. Okay, with the way it came down and test this level to rebound back up, what I'm actually looking for here, or what I would be looking for here, is possibly a continuation towards the upside, right? A continuation towards the upside, especially now that if I do this, it is right at that decision level. You can see price, this move down from yesterday, put in a Fibonacci retracement levels, 61.8% right there. We just tapped that and we're seeing a brief retracement or brief rejection of that level at 104.70, right? 104.70. So I'm looking to see what happens at this point. I'll put a line right across just so it's easier to see. Let me do that. Right at this point, if we do see this break above, if we do see price break above 104, so I'm looking at that upward push, break above this 104.70 level, I would say that the next high point will be at this 105 level. Okay, at 105 with the key resistance at 105.35. So overall, what I'm expecting here, we had that first move down towards 104, a rebound. Now I'm looking for that continuation towards that 105 level. Right? I'll say 105 as a round number. So that again now casts the overall view of where we think other currency pairs could go, because we're now expecting further or continual dollar strength. So yesterday again, looking for rejection of 6262 to sell down. Let me just do this. Okay, so we'll keep that. So now updating this, we're looking at the 2nd of March. We're looking for dollar strength, right? Continual strength from 104.70 to 105. Right, so this is our summary sheet. I'll try and do this just to keep it simple for everyone, looking for that upward move as a summary. Then we'll look at the Kiwi dollar to start. Hey Albert, how are you? Okay, so Kiwi dollar, what we saw or what we spoke about yesterday was that we were looking for rejection of 0.6262 to sell down. Look at what's happening now. It went up, it tested 6262, and we're selling down. Okay, so I'm super happy that it's worked out this way. It hasn't come to our take profit at the 62 round number now. So I'll take this line away. Right, so that's working out very nicely for us. At this point, I do expect, because we're expecting that dollar strength to continue, or the recovery in that dollar strength, so I do expect this to come down towards 6.2 as a round number. In fact, it's not a resistance anymore. This would now be our resistance turned support level, right? So now it's a support level. If you didn't get into the trade on this yesterday, then it's too late now. Let's look out for the next move. All right, it's too late now. Don't rush in. It's not worth trying to scalp that little bit. I'll zoom in a little bit just to highlight one point to you all, is that as much as we drew this as an entry, if you did get in early, you see this push up and reject back down. If you did get in early, right, it all comes down to where your stop loss is. Right, I had my stop loss at that 20 pip level above the resistance. What we saw was that price actually shot down, came back up, didn't hit stop loss, and now continued lower again. So I'm still looking for that 0.62 as a take profit level. Hey K Gusi, if I got your name right, good to see you here. glad you made a party. Okay, so now given this move on the Kiwi dollar and the expected strength on the dollar index, I would say if you haven't entered a trade, if you're neutral on the Kiwi dollar, I would be looking for a continuation towards the downside. Right, a continuation towards the downside. I'll be looking for it to break below 6.2. Right, so I'm just looking at this, scrolling back. Okay, so below 6.2, I'm looking for a similar move to this, to what we saw here on the 24th of Feb. Break 6.2, big downward move towards 6.131. Again, stop loss, I would say about 20 pips, a good distance away. Take profit, I'll put it down to this level here. About, we can even go for, just a nice round number of 60 pips. A 1:3, if I did this at 20, right? A 1:3 risk reward ratio towards the downside here on the Kiwi dollar. But bear in mind, it does need to break below 0.62. I have it a little bit more conservative. I've got it down at 6.2. You can even go for 6.290. So 21 pips, 22 pips stop loss. Take profit of almost 60 pips. 1:2.7 risk to reward ratio. The thing to pay attention to here or to note is that you see how if I drag this from this point, the Fibonacci retracement up to this level, 50% and 61.8% is where we saw a lot of price fluctuations. Okay, so thing to note here is that at around this level, okay, at around this 6.1, just below 6.170 is where you would want to start having some considerations. What I mean by considerations is if you sold it, right, and it's coming down at this point, look, analyze it again. Does it have strength to continue down? Does it have strength to continue down? If it does, great. You can hold it down towards the take profit level. Another consideration is at 6.170. You might want to consider, do I want to close out half my trade? Right? Take some profit on half your trade, or at that point, move your stop loss to break even. So a few things to consider on a slightly larger move towards you don't have to just enter a trade and let it run and don't do nothing to it. You can look to close out half the trade, right? At least take profit on half the trade, and then move your stop loss lower, right, to break even, so that worst case scenario, at least you've protected the whole thing, your trade. And also you could come to the point where it gets to 6.170, looks like it's not going to break, looks like it's going to rebound, and then you might close out the whole trade. So I always say that 6.170, this level would be about some decision making point, right? A halfway point where you're going to make a decision. So just updating this again, Kiwi dollar downside, looking to break, sell if price breaks below 0.62. All right. In particular at that 0.6190 level. All right. By the way, let me know, put it into the chat, what do you all think about having a summary sheet like that? Does it make it easier? Does it help to clarify things a bit better for you all? Put it into the chat, let me know. I tend to, during my webinars, always make people type stuff and comment and do all kinds of things. I like it more two-way rather than me just talking nonstop. Okay, you can see dollar index already trying to break above that 61.8 level. We're still looking for that upward move. So that's why we see, that's why I would say that Kiwi dollar looks like a good move towards that take profit level. So now looking at the Aussie dollar, right? Aussie dollar did pretty much the same thing, but when we looked at Aussie yesterday, we said no trade because we were looking, I think it was right in the middle there. All right, this was 3 p.m. It was quite close to the resistance level. We were not ready to try and scalp it up. I was actually anticipating that we might see the Aussie dollar break towards the upside, especially given that it's broken that trend line, that bearish trend line, right? And also expecting that on Tuesday next week, we're going to see the RBA with their interest rate decision, most likely another 25 basis point rate hike. So I'm a little bit surprised to see the Aussie dollar drop like that, right? A bit surprised to see it drop like that, but this is driven down because of that dollar strength. Not so much because of what's happening in Australia, but because of that dollar strength. So it is trading towards the downside. I did have a quick scalp on the Aussie. I did have a quick scalp on the Aussie. I did it just before lunch at 12. Yeah, as it rejected that 6750 level, I saw it reject that level. I did have a quick trade. I got out just before this session, about, yeah, I think about there. So it's not a big trade, but I just wanted to jump in a quick scalp on the Aussie since it was dropping. So right now, given that we've just spoke about the Kiwi dollar trading lower, the dollar strength most likely going to continue. What could happen to the Aussie dollar at this point is, again, let me just test this out and see how it works. How it works as in whether it aligns with any levels. It is, again, right at that 61.8 level, right? In fact, I'll take away this trend line because it's a bit confusing now. It is right at that 61.8. Hasn't broken yet, came close. I would say that this is a point that we would be considering whether it breaks or bounces. Again, I normally would love trading the Aussie dollar, but every time we talk about Aussie, it's right in the middle of that support and resistance level. Tends to not be a great place to get into a trade. Okay, so I do think that we're likely to see this continue on towards that support level, but this is let me just have a look. This is about a 30 pip move towards the downside. I don't think it's worth that risk to try and trade down for that 30 pips. Okay, so I would say just watch the Kiwi dollar. I think it'd be interesting more on the Kiwi dollar than the Aussie. Also because when you look at the Kiwi dollar, if it does continue down, it would be breaking a nice round number level. Going to give it more strength to push price lower compared to the Aussie dollar, where I do know it's going to come down, or most likely going to come down, but it's right in the middle with no key level there apart from that 61.8. Okay, so still looking for the downward move, but possibly not a great trading condition. Any questions so far? All good? Okay, great. So now with that, US yen. Put your hands up if you did jump into a US yen trade. Put your hands up if you did jump into a US yen trade. Why I say that is, hey, we spoke about it yesterday. So again, Aussie no trade. US yen, we're looking to buy from 135.90 or 137. If you did get in, we saw that come down to test that support level and bounce back up. Right, once it bounced back up 135.90, right now you would have hit your take profit level already. Right, you would have hit your take profit. Let me just take this away. Your take profit towards upside, a good 97 pips, almost 97 pips on the US yen. So how Is it? What do you think? We have um, so far since our first session. I hope I don't jinx it. First session over the last 1, 2, 3 trades, we've made two good trades already, or two good trade setups already. Look at the dollar. Dollar's really pushing up. Okay. Do you set alerts when price hits these levels on TradingView? I don't actually set alerts on price on TradingView. Why? So it's because I actually do all my trading on MT4, and I'm actually looking at my charts. I sit here, I do my analysis, I do my writing, I do my webinars, I do a lot of other work as well. So I'm looking at my charts all the time, which is also why I'm constantly evaluating and re-evaluating possible trade setup. So I don't put an alert, but I do know that if you want to, yeah, you can just go there, click that, and then set your alert for respective price levels. Franklin, can you explain more on this Aussie dollar? All right, so coming back to the Aussie first, it is trading lower. I don't know what else to add on to it, right? I do think that it's going to trade downwards because of that dollar index strength. Limited, I do think that there might be limited downside. About this 670 level, 0.67 level, quite a strong support. We saw it test over the last couple of days. And if I went onto the H4 time frame and zoomed right out, you'd see that at this 0.67 level, even back in January, it tested this level and bounced strongly towards the upside. Any further downward move would be at 6630, which is the low that we saw in December, right? In December, and it's been climbing back up since then. So that was the most recent low, 6630. But most recently, it does need to break below that 6-7 level first. Why I'm urging extra caution on the Aussie dollar is also because into next week on Tuesday, we do have the cash rate and the RBA rate statement to come, right? So interest rate decision to come from the RBA on Tuesday next week. We are now on Thursday already. So only, the rest of today, Friday, you can see not much news. Monday tends to be a little bit quieter, and then the Aussie dollar, the Aussie cash rate. So that's one reason why I think we might see this come down and then possibly see it bounce back up with the interest rate decision. In fact, I know I'm digressing a little bit or a lot. On 7th of Feb, the last time we had the interest rate decision, I'll scroll back and show you what happened. On the 7th of Feb, okay, here we are. At 11, that's where we saw happen, right? At 11, we saw this push towards upside. We saw it bounce on Monday, well, on Tuesday. My dates are a bit wrong here. Okay, on Tuesday, we saw it come down, test. On Monday, we saw it come down, test this level, traded up, and then interest rate decision, 25 basis point rate hike. We saw this push upwards. I'm expecting, or I'm looking for a similar move. Maybe come down, slowly gravitate down towards the 6-7 level, and then push back up through Monday and onto Tuesday. Not expecting a big upward move, but it's likely to continue trading within this range. Hey Jason, how are you doing? So I answered your question there, Franklin, on the Aussie dollar. With that, coming back to the US yen, came up, tested, would have hit your take profit level already. So that's done. At this point, if we do see further dollar strength, right, continual dollar strength, then it is most likely going to break above this 136 or 137 level, right? I'm looking for it to break 137 and climb towards that 138.14 level. So it's just a continuation. just a continuation towards the upside. Right, so I'll be looking for about 137.10. Stop loss relatively wider at about 40 pips, almost 40 pips. Take profit about 90 pips or so. So you're still looking at a 1:2.3, 1:2.4 risk reward ratio towards the upside. Okay. One question I've received from many of you, especially after yesterday's session, was, you have difficulties with your trades. You're new to trading. How do you get started? I said I'll answer that question today. One thing that I'll always suggest to new traders, especially, is stay on the H4 or the H1 time frame. Right, H4 and H1 time frame. Then after that, trade following the trend, and respect your levels. So exactly what I'm sharing with you here. I'm looking at this on the H1 time frame. I'm following the trend. I'm looking for price to, bounce off with the upward trend, looking to buy up. Right now, I'm looking for it to test and break above that resistance, looking to buy up as well. Okay, so same thing what I do, follow the trend, look for it to break a resistance level or bounce off a support level before getting into a trade towards that next resistance level or support level. Okay, so those are the few things. Follow the trend, support resistance levels, and H1, H4 time frame. Don't go to a smaller time frame. It's just going to get super confusing, especially for new traders. So just an update here. US yen break above 137 could get to 138. I'm just going to scroll back and see if there is anything to watch and pay attention to. I think that looking at the way the last time it broke above 137, we saw a big upward push towards 138. Looks like it's a good move towards the upside. This big drop here has been covered already. So right now we could see this prices here at the moment. We could see that similar move towards that 138 level. Okay. Thanks, Enris. So again, back to this US yen buy from 137.10. Right, there's no more or because this was the view that we had from yesterday to 138 resistance. All right, it's relatively straightforward so far. Then we look at the pound dollar. Super interesting and super lucky save here on the pound dollar. I'll have to zoom in to show you this. This is what we spoke about yesterday. We were saying, hey, if it breaks above that 1.2080, you have it there. Pound dollar 1.2080 looking to buy. Watch out for potential head and shoulder. It went up to that 1.2080 level, did not close above 1.2080, trade not triggered, and then we saw it retrace or continue to trade towards the downside. All right, to trade towards the downside. So I'll take that away since it was invalidated, didn't happen. Then, as we're talking about here, watch for potential head and shoulder. You can see here, shoulder, head, and shoulder. So not a textbook kind of view of a head and shoulder because it is a bit of a skewed head and shoulder. And then the neckline was also skewed towards the downside, right? So I did have this. You can see that, I'd say that's the neckline. Okay, I'm terrible with chart patterns. So if you do have any additional views on the chart patterns, do let me know. That view, that neckline, given that it's broken, we're now seeing that further push towards the downside. All right, it went up, tested that level, failed to break strongly higher, now looking for downward move. Key support still at 1.1927. And let me see, 1.1927 would still remain. In fact, I'll just update it to 1.1920. Very risky, very risky to enter a trade on the pound dollar now, okay, on the H1 time frame. If we were doing this on M15, great, I would have a trade on the M15 time frame, but on the H1, I would think that it's very risky. I do think that we're going to see this move down towards 1.1922 as a support level. All right, so I'm still looking or anticipating that move down. What's going to be interesting is what happens at this support level. Understand analysis, not the entry, because it could just be a rejection. Okay, I'll come back to the US yen for you, Augustine. Just give me a moment after the pound dollar. Okay, so I'm still looking for this, dollar strength anticipated to continue. Looking for this to push down towards that support level. This would be about a 40 pip move towards the downside. The only reason why I wouldn't like a trade here, if you may just put that back in again, only reason why I wouldn't like a trade here is just because the stop loss level would be a little bit weak, right? It would be a bit weak. And what I mean by weak is that ideally your stop loss would be above a high point, but that's going to be terrible risk to reward. And then if you had it anywhere even half remotely reasonable, it's still a bad risk to reward. So I wouldn't be able to put a stop loss level with any clear confidence, right? I do know that people would say previous candle high or past two candle high, but I wouldn't be super confident with where to place a stop loss. And that's one reason why I would avoid getting into a trade, just because of not being able to have a good stop loss level. So I'll rather wait for it to come down towards this 1.1920 level, and then possibly look for a bounce towards upside or a break towards the downside. If it does break, let me just zoom out and have a look. If it does break towards the downside, then you do have your next support level here at 1.1859 or 1.1860. I would actually like 1.1850. Okay, so back to the H1 time frame. I would rather watch it go down. If it has enough strength and momentum, then look for it to break that support level to sell down from 1.19, maybe 1.19, about there, 1.1909. Stop loss about 30 pips, take profit about almost 60 pips, a 1:2 risk to reward ratio towards the downside there on the pound dollar. Okay, so updating this pound dollar, H head and shoulder is gone already. So we're looking for selling of if price breaks below 1.1922, in particular 1.1909. Breaks below 1.1922. I'm looking for 1.1909 as an entry level. Okay, so that's the view on the pound dollar. Nothing yet. Looking for it to break that support level to trade down to the next support. So coming back to the question on the US yen, let me just read the question again. I did understand the um, analysis on US yen, but not the entry because it could just be a rejection. I mean, there wasn't any higher time frame candle close bullish. Can you explain? Okay, so yep, analysis, dollar index strength pushing it up. That's also why we're expecting this push. In terms of the entry, I have my resistance here at 1.36 or about 1.37. What I'm looking for is price to close strongly above that level, right? Strongly above that level before we look at that buying opportunity. That's why I've given it a bit of a space there. If we looked at it on the H4 time frame, just so that it's a bit easier to see, it's not easy to see at all. Okay, come back here. You can see that at this point at 1.37, let's find 1.37 here. Okay, do on H1. Sorry, I'm flicking between charts a lot. Okay. So the last time it broke above 1.37 was 16th, 15th of December. We saw this big push towards the upside. And then before that at 1.37, the last time it did that, we saw a little bit of a fluctuation here before that push up, right? Quite close towards the 1.38. So that's why I've got this at this point. Okay, I'll take that line away for now. At this point, and then I have my stop loss relatively wider. You see, I normally do a 20 to 30 pip stop loss. This is about 40 pips just to account for a possible fluctuation. But main thing is wait for the candle to close above. If it does close above this range, most of the time, considering that it's broken a resistance level or resistance range, I would say that we should see that continuation up. I hope I answered your question there, Augustine. I can look at the euro yen as well. I will look at the euro dollar first. Spiros Gigantus, I have actually looked at the Kiwi dollar. So the Kiwi dollar analysis, we saw this coming down from yesterday. Continuation of the trend towards the downside on the Kiwi dollar due to the expectation of the dollar index continuing to strengthen. So if you missed it, check back for more detail on the video. All right. Okay, so coming to the euro dollar. Euro dollar, yesterday we were talking about this buy above 1.0650, went above, you can see here, went above 1.050 and pushed up. Didn't hit our take profit, pushed up towards that 1.0690 level before retracing back down. Okay, so again, I missed out on this yesterday. You can see why it retraced back down. This was because of that slight hesitation area that we saw here Tuesday last week or two weeks ago, right? On the 21st, we saw this level hit and then retrace back down, and that's also why we saw this hit and retrace back down. Okay, so very important to identify possible hurdle levels. I call it hurdle levels. So given that it's gone back down from that resistance, broken above that resistance, tested and then rejected back down, now breaking through this support level, right? It's no longer a resistance, it's a support level. You could be looking for that downward move, anticipating continuation of that upward move on the dollar index, looking like it's going to remain strong and towards the upside. So I'm looking at this possibly pushing down. This would be a rather immediate trade, right? So remember I talked about prioritizing your trade. I would actually be quite keen to see this on the hour close, right? On hour close, could it close a little bit lower, right? At about that 1.06, maybe 1.0630 level, right? 1.0630 level, which would give us a good signal for further downside potential. So I'm looking dollar pushing lower, pushing higher, could drag the euro dollar down, which we could see a downward move 1.0630. Stop loss about 20 pips would be reasonable. Take profit, I would love to say 90 pips towards the downside, but we know that's very unlikely to happen. Very unlikely to happen. How I would look at this is, again, looking at these points. 61.8, we can see it testing here. Okay, I wouldn't like this. I would say that there is a hesitation area here at that 1.0568 level, and also before that a bit of a level here at 1.0590, right? So I would actually be looking, I'll take that one away, selling on the euro dollar down, possible hesitation level at 1.0590 with a key big take profit down at 1.0535. Okay, so it's retraced back right after I thought this would be a super nice trade that would happen during this session. It's completely retraced back. So possibly a little bit more waiting to do for this to trade lower as the euro. Well, see, the dollar has retraced back down as well. All right. So to me, in reference to Augustine's question on the US yen, to me, this support level has not broken yet, right? Because it tried to go down, it's still within that range. It's still within that range, so it's not ready to sell yet. I'll only be looking if the candle closes below 1.0630, then I'll be looking for the downward move. If it comes down to about 40 pips, I would say 1:2 risk-reward ratio, great. I would close half a trade or move my trade to break even and then try and ride it towards the downside. Okay, I see your questions on the euro yen and the pound yen. I will get to that now. So why I get to the euro yen and pound yen after or a bit later now is because I do want to know what's happened on the pound dollar first, and then also what's happened on the euro dollar first, then and also the US yen. Then after that, look into the cross pairs. It gives us a better view of where prices could be moving towards. Okay, so euro yen. First resistance level that we saw from yesterday, now broken towards upside. You can see that euro dollar was dropping, but yen was pushing up. So the euro yen is trading higher not because of euro dollar strength, but not because of euro strength, but because of yen weakness. Okay, so when you look at cross pairs, what you consider is why is it moving? Which is the driver that's pushing price up? Okay, so anticipating this point, I just realized I haven't updated my euro summary yet. I'll get back to that. We do have another level here, right? So you can see here, this was a good high point here from December 20th. Okay, and it forms quite nicely there. And then the next key resistance here at 146.67. So again, coming back to this, at this current point, look at this. There is a move, or there is likely to be a move towards the upside, but I just want to highlight this to you is that it's a 30 pip move, right? It's a 30 pip move towards upside. I wouldn't be super keen about trying to jump or trying to catch that move. I would say that instead of trying to catch this, wait it out. Let's see what happens at 145.80. Are we going to see that push towards the upside, towards that 146.67? But with the way that the euro dollar is potentially going to drop, right? Euro dollar potentially going to drop means that on the euro yen, we're going to get a conflict of impact. A conflict of impact, because if the euro dollar drops, it should be dragging the euro yen down. It should be dragging the euro yen down. Then, as the euro dollar drops, we're likely to see the US yen push higher. And you can see now it's actually retracing. And if the yen does push higher, we're going to see this push back up. So, in terms of a trend following idea, I would say that it would be nice if we could see it trade higher, break above the immediate resistance for a big move towards upside. I think that we might actually see a bit of a counter trend move at this point. Let me just do this. You can see that, right, it's been supported. It did break but retrace quite quickly. Possibly going to see this break towards the downside if the euro dollar drops quite significantly, and we could see this correct back down again. So I'm a bit neutral. I would be more neutral on the euro yen. Trending wise, should continue towards upside, but with the way the other cross pairs or the major pair is playing, we could see this trade down. Okay, so for those of you who are counter trend traders, you could be looking for selling opportunities below 145.20, stop loss about 40 pips. Take profit, I would say try for that one there, which is about 70 pips, almost a 1:2 risk reward ratio towards the downside. Trend following, I would say long position above 145.80, take profit 68 pips, stop loss, you could even do 30 for that push towards upside. Okay, hope I answered your question there on the euro yen. Now let me go back to my euro dollar because I forgot to update that. Okay, so euro dollar breaks below. So euro dollar we're looking to sell if it breaks below 1 point, I forgot what number was it, 1.0640 at specifically 1.0630. breaks support of 1.0640, in particular 1.0630. All right, so that's the view on the euro dollar. I'll put in euro yen at the bottom. Euro yen, I don't really have a view on that. I'm following the trend. I would say that I'll be looking for a buying opportunity from, what was it? From above 145.80, from above 145.80, above 145.80. All right. Now, with euro yen done, let's look at pound yen. And guys, if you can, oh, messy. If you can help me out while you're attending, while you're on this session, do help me out. Click that little rocket ship there at the bottom. And if you are on YouTube, click that like button. If you haven't already, click that subscribe button. It would help me out massively somehow or rather. All right. And if you haven't already, do check me out on YouTube. All right. So euro, pound, yen, a little bit better. I like pound yen a little bit better than the euro yen, just because we do have some relevant candles towards the upside. Also, again, interestingly, on the H1 time frame, we have formed the head and shoulder pattern there, right? Similar to what happened on the pound dollar. Right now, consolidating at that 163.80 or just below 164 level. So I would say, first off, resistance level here, support level right there. Let me zoom out and have a check. We do have a bit of a level here as well. Now it's as a support. Okay. Very intermediate resistance level here. I haven't got a template for intermediate resistance, but there it is. Looking at the pound yen, at the way it's moving, what is most likely going to happen is that you're going to see a big surge towards the upside. If you don't have a trade now, you'll probably miss that first move towards the upside. We could be looking for that next upward move. However, as we look at the pound dollar possibly trading lower, it's the same story with the euro dollar, right? Pound dollar possibly trading lower, US yen looking like it's pushing up. We have that conflicting view towards the pound yen. I think it's going to consolidate at this range. I would actually like to see, just because of how since yesterday it's dropped that much, and you can see that most likely it's came back up, tested that 38.2 level, rejected and continued down again, right? And now at that 23, looking to break that 23.6 level. Okay, so like that. So what I would say is that I wouldn't go for this small move, because if you're looking at the pound yen looking to sell down from here, take profit 50 pips, stop loss about 40 pips, could work. Not an easy trade to make. I would rather prefer to look for it to come down to test and break below this 163 level, right? I'll look for it to break below 163, then trade it down towards possibly that 161.50 level. Support there. Okay, so what I'll be looking for on the pound yen, I like this. I would prefer this pound yen compared to the euro yen. There you go. Big move. If it be patient, be super patient, wait for it to break 163, about 162 dot, even if we went 162.80, a 40 pip stop loss, 120 pip take profit, a 1:3 risk reward ratio towards the downside. Okay, so I'll add that in. Any questions on the euro yen and pound yen for now? JPY selling. So you can see there's a bit of a conflict there, just because of how the pound yen has been dropping before. Yesterday, dropping quite strongly. That's why I'm looking to sell. But you can see on the euro yen, it hasn't dropped as much. We're seeing that big push towards upside, and that's why we're looking for that buying opportunity. bit of a contradicting view, and that's where you would have to plan your trades, right? Plan your trades, prioritize which one's going to happen sooner, which one's going to happen earlier or later. 163. Selling below 163, below 163 support level. Okay, so the question here is, do I always enter the trade immediately after the H1 close, or do you wait for a few minutes longer? What I tend to do, start there, is I do actually look for the hour to close, right? I look for the hour to close. Then I do wait about 15 minutes, 10 to 15 minutes, because what I normally find happens is that once it closes, there are strategies that enter trades on the hour close. So we do see that price fluctuation after the hour close, right? A quick retrace before continuation again. So that's why I would always wait for the hour to close, give it a couple of minutes, up to 15 minutes, before I get into the trade. Good question there, very good question. Nur, question about the euro yen again. Check it out. Check the euro yen out. Video through the video. It's not super interesting. So I don't really want to repeat that. It's not a super interesting trade setup there. So check the video. It's there for you guys. All right. U.S. Swiss franc. Again, US Swiss franc came down, broke that level. We spoke about this yesterday. On the US Swiss franc, we're looking to sell if price breaks below that 0.94 level. Double top formation. Good support level here at 0.94. As we were talking during the webinar yesterday, it was breaking. It broke below, right? I'm trying to get rid of that. Just move this right across. Okay, it broke below this point, and then after that went all the way down, came very close to the take profit at about 0.9350. We had our take profit at 9348, so it's a 2 pip difference, right? You would have closed out your trade. Super happy about that, towards the downside there on the Swiss franc. Okay, take that way. Okay. So if you did jump into the US Swiss franc, let me know. I do want to know, did you guys jump into any of these trades or part of it? Do let me know. All right. So I'm super happy we made good trades. Kiwi dollar. I think we made money on the Kiwi dollar. We did a good one on the US yen and also the Swiss franc. We had the pound dollar at a trigger level, didn't get triggered, and then retrace back down. All right. Leader, you're late. It's, even back then when you were joining the sessions, you were late as well. So it's all good. The videos are there. You can check it out over and over again. So US Swiss franc dropped all the way, bounced right back up, again right at that resistance level. I'll draw that one more circle there just to highlight now a triple top formation. All right, and especially with the hourly pin bar, right? With that hourly pin bar, what do you anticipate is going to happen here? Most people, if you were trading just based on a pin bar formation or a chart candlestick formation, you would be thinking that we're going to see a big reversal towards the downside, right? A big reversal towards the downside and possibly all the way back down. Just be extra careful here on the US Swiss franc, because as we look at the dollar index pushing higher, if that continues to push higher, that's going to lead to the Swiss franc pushing higher. All right, the Swiss franc, because dollar Swiss. So a dollar strength is going to cause the dollar Swiss to push higher. So it's interesting that we have that formed there. Just double checking on the news. No news on the Swiss franc to cause any further strength. No comments as well. Okay, so what this means is that on the US Swiss franc, what I would anticipate, take this away for now, is that it's going to retrace briefly before possibly pushing back up. I would love to say that we could be looking to sell down, about a 20 pip stop loss, about a 20 pip take profit level here. But with the way it's moving, I think that would be risky, possible, but risky. So I would say that, again, checking on the dollar, still pushing up. I'm not comfortable. I'm not comfortable with this Swiss franc behaving the way it is. I would say either let it break above and look for that buying opportunity. Let me find the next resistance. Or maybe that's why. A very high point here on the Swiss franc. So let's look at that. About there. That most recent high point there. So coming back to recent, I still don't like it. Okay, I'll tell you what. Because I don't like it that much, what I would say is don't force a trade, right? Don't force a trade on the US Swiss franc. In fact, I would say don't force trade, stay away. All right? Makes sense. What's the stop loss? I think it would be time to enter. Okay, let's look at the euro dollar. Oh, no, wait, I want to go back to that. Euro dollar here. There we go. Okay, so euro dollar dropping. My stop loss is about 20 pips. You could go 20 at the most, you could go 30 pips. And then you could be looking to trade it towards downside. Good spot there. Start there. Thank you for sharing as the price was moving. I would say that it does look like a good move with the dollar pushing higher. Euro dollar trading lower makes sense. Let me know if you did jump into a trade. If anyone else jumped into a trade as well, do let me know. I would say your stop loss could even be, no, 30 looks a bit high, but 30 would be reasonable. Because of that kind of profit that we're looking at, you could be looking at that 30 pip move. 20 to 30 pips. Check your risk, right? Manage your risk. It's retracing back, but I think it should be okay. US CAD, again, same thing within the range since yesterday, fluctuating. We saw big push towards the downside, spike back up, retrace back down, not formed any clear directions yet. When we talked about this yesterday, we said no trade. I would also say no trade again for today, unless you went into the smaller time frame, which I'm not going to suggest that for most of you. So I would say no trade here on the US CAD as well. Okay, so reason why the euro dollar is retracing, or pretty much everything is retracing. We see the dollar index retracing slightly now. Okay, so we see this too. All right, that sell. US yen retracing. I think that we might not see this push. Maybe later tonight. We'll have to watch. So this is not going to be an immediate thing. This might be later tonight. Pound dollar trading lower as expected, looking for it to break that support towards the downside. Euro dollar right at that entry level point, looking for a relatively big move on the euro dollar towards the downside. US Swiss franc confusing, should be going up, is retracing, especially with a pin bar. I do think it could retrace, but I'm not going to suggest selling it down. US CAD also retracing, but super choppy price action on the US CAD. Okay. Any questions at this point? All good. Euro yen trending higher, tested this level, looking like it's retracing because everything else is retracing. So I would say that, again, I'm more trend following. I prefer to follow the trend. Let it retrace, let it bounce back up. I'll look to buy it up above that 145 level towards 146.67. Pound yen, more interesting as it comes towards the downside, looking for it to break that support level for a significant move downwards. Alrighty. So with all that said, any further questions? If you haven't already, please help me out. Click that little rocket ship, click the like button on YouTube, click subscribe, click follow, and also, one thing that I look forward to from you guys is I post this analysis. I posted a couple today already. If you go through that and you have any questions or you would like to share your views or your thoughts, your possible trade setups, put it into the comments. Put it into the comments and let me know. I'll be keen to share with you more on detail your setups, my setups, put in comparison, and we can share ideas there. All right. With that said, summary is there. Any further questions? Thank you, Kelvin. Good to see you here, Kelvin. Hey, Jambi. On TV, it seemed the stream ended already. No, stream should still be running. Is it still running? Yes, it's still live. Any issues on the stream? Where to find this page? All right, here you go. So the link is there for the page. Hi, Chinon. How are you doing? Good to see you here. Hi, Lawrence. Oh, it ended. No, it's still showing that. Just want to check, guys on TradingView. Can you still see the stream? Ah, okay. No worries. Hey, well, okay. Somehow we do have. So I'm looking at TradingView and on YouTube. Guys on YouTube, we do have someone on TradingView saying that it's still going on. So I'll try and figure it out. I'll struggle, but I'll try and figure it out. Okay, but yeah, if it does cut off at any point in time, you can jump onto YouTube and join me there. So with all that said, again, guys, remember, I will be back tomorrow. So this is live now. I will be back tomorrow, 3 p.m. GMT plus 8 as well. I will be sharing, again, daily market analysis. And hey, if you do have any questions, educational questions, tips, hints, things that you're looking for, put into the chat, let me know. Drop me a private message, let me know. I will be happy to create new content for you guys just to help you guys with your trading journey, through your trading journey. All right. I have people here attending the session who I've helped or I've been doing webinars for. I'm leader there. Couple of years already, right? So good to have you guys back. If you do have any questions, do let me know. right? I'll be happy to create content for you guys. Anything for you guys to get profitable. Come on, let's go. Let's make money together. With that said, I wish you all good trading ahead for today and tomorrow until we speak again. Trade well, trade safe, and take care now. Bye bye.